Hello, this is Mitch King with the Wednesday, November 19th Daily Stock Picks newsletter. It was a really big down day today with the Dow Jones 30 Industrials down 427 points or over 5% for the day. This is the daily chart shown here. We are right at the point at which we could drop below the October lows of 78.84, and it looks like we're going to do that tomorrow, because we only have to go down about 110 points. The NASDAQ Composite has already done that several days ago, along with the S&P 500. Let's take a look at Apple Computer, and here you can see the line in here. It hasn't broken below. It acted relatively stronger than many stocks today, even though it went down 4%. The NASDAQ was down over 7%. This was a good intraday scalping stock, both long and short today. RIM went up initially and then corrected down. That's kind of what I was looking for. But I'd be reluctant to be shorting this stock or any stock now other than a intraday trade that may not last very long. We could get buying at any time. One of the things that we did not see is extremely high volume with stocks. What we want to see is increasing volume. I don't see it right here. You can see pretty much flat to decreasing volume here recently, and that's not a great sign for trying to pick a bottom. The volatility index is gradually moving up. No sharp spikes in terms of increase of the volatility index like we saw right in those 2 days in early November. So this is a very sustainable climb in the VIX index. Let's take a look at the ultra short SKF. That's more like a chart I like to see, really a bull short chart pattern, and these things usually fall apart like we saw right in here and here. Not necessarily an extremely reliable indicator, but it is one of which I do look at. This is the percentage of stocks above the 40-day moving average. It's dropped down to 6.7%, but remember back in October when I was showing you this indicator was down about 1.25% for several days, and then we saw a nice rebound up and down. It's just another indicator. I was explaining in the text report the put to call ratio really spiked up, so we're seeing some possible reversal there. That's just another indicator developed by Martin Zweig. This is another indicator called the Smart Money Dumb Money Confidence Indicator. These lines are similar to what I've shown you on the VIX versus the index. I've shown this to you several times over the last 4 or 5 weeks. This reading here in the red is the confidence of the dumb money. He has on sentimenttrader.com, he has his own description of how he defines dumb money. Of course, we want to be this green smart money, and what we're looking at on this is when the spread between this high number, the smart money, and the dumb money is bigger and bigger, the higher probability that the market starts rebounding. It's like when the VIX is extremely high and parabolic and the stocks are an extreme opposite on the downside. So right there at the top of this line there was a real high reading on the smart money and a real low reading on the dumb money confidence, and that resulted in a rebound. Right now it seems like to me that the dumb money needs to drop to a lower value below the 20 mark, and this needs to drop up to move up here toward 80, and that would be a real nice indication that we could be getting a reversal fairly soon. So this is something I keep an eye out. It's a subscription. He also pointed out that we had a 60 to 1 ratios of stocks going down versus up. That is a all-time new high right here. You can see that here. We'll look for a nice intraday bounce, but I wouldn't be holding these stocks overnight. I think we need another day or two of sharp down before we get the probabilities really in our favor to start going long. We need some more indicators to confirm with a couple others that we've got a bottom. So I think we're going to go lower lows here for sure on the S&P 500 and the NASDAQ. We'll probably break below that 7,800 number on the Dow tomorrow. which marks that October 10th or 17th low. You guys take care, and we'll talk to you soon.